Look, something happened in June 2024 that most people completely missed, and I'm still not sure the full implications have sunk in yet, even for people who should know better. Saudi Arabia let their 50-year petrodollar agreement with the United States expire, just quietly let it lapse. No major announcement, no dramatic headlines, but this could be one of the most significant economic shifts of our lifetime. Here's what actually happened. Back in 1974, after Nixon took us off the gold standard, Henry Kissinger negotiated a deal with Saudi Arabia. They would price and sell their oil exclusively in US dollars. In exchange, we'd provide military protection, weapons, and political support. That agreement, which has been the foundation of dollar dominance for 50 years, expired on June 9th, 2024, and the Saudis chose not to renew it. Now, they're not suddenly refusing dollars or anything that dramatic, but what they've done is signal they're now open to accepting payment for oil in multiple currencies, yuan, euros, potentially others. And guys, that changes everything about how global finance works. Most people don't understand how critical the petrodollar system has been to American economic power. Let me break this down from first principles because the mechanics are actually pretty straightforward. For the past 50 years, if any country wanted to buy oil, they needed US dollars first. Doesn't matter if you're Japan, Germany, India, Brazil, whoever. You had to take your local currency, exchange it for dollars, then use those dollars to buy oil. That created permanent structural demand for US dollars globally. Every country on earth needs energy. Energy requires oil and gas. Oil and gas required dollars. It's a closed loop that forced the entire world to hold dollars and dollar-denominated assets. This is why the US has been able to run trillion-dollar deficits for decades without facing the kind of inflation or currency collapse that would destroy other countries. We print money, and the world absorbs it because they need dollars for energy. It's honestly the greatest economic advantage any country has ever had. We export paper currency and import real goods and services. The rest of the world funds our lifestyle. But that system just cracked. And I don't think most people, including people in Washington, fully understand what's coming. Here's what's already happening on the ground. China, which is now the world's largest oil importer at about 11 million barrels per day, has been negotiating with Saudi Arabia to pay for oil in yuan. They've been working on this for years, and now they have the green light. Russia, after being cut off from dollar-based systems due to sanctions, is settling energy trades in rubles and yuan. India is negotiating rupee-based oil purchases. The numbers here matter. Global oil trade is roughly $2.2 trillion annually. If even 20% of that shifts away from dollar settlement over the next few years, that's $440 billion in reduced annual dollar demand. That might not sound catastrophic, but it's the trend that matters. Once the dam cracks, the water keeps flowing. And it's not just about oil. Saudi Arabia joining BRICS, which happened in January 2024, signals a broader geopolitical realignment. BRICS now includes Brazil, Russia, India, China, South Africa, plus new members Saudi Arabia, UAE, Egypt, Ethiopia, and Iran. Together, these countries represent about 45% of the global population and roughly 35% of global GDP, and they're actively building financial infrastructure that doesn't depend on the dollar. China and Russia have already built CIPS, the cross-border interbank payment system, which processed over $18 trillion in transactions last year. That's their alternative to SWIFT, the Western-controlled financial messaging system. When Russia got cut off from SWIFT in 2022, every other country paid attention. The message was clear. If you depend entirely on dollar-based systems, the US can shut you down economically overnight. That's a huge incentive for countries to diversify. And the Saudis opening up to multi-currency oil settlement gives everyone permission to do it. It's not just economically rational anymore. It's now politically and strategically safe because the anchor of the petrodollar system itself is moving away from dollar exclusivity. Now let me talk about what this means for the US economy, because the second and third order effects are massive. The US national debt is currently $36.2 trillion. We're running annual budget deficits around $1.8 to $2 trillion, and we fund that deficit by selling treasury bonds primarily to foreign governments and central banks. Why do foreign entities buy US treasuries? Because they accumulate dollars from trade, especially energy trade, and treasuries are the safest place to park those dollars. But if countries aren't accumulating as many dollars because they're buying oil in yuan or euros, they don't need to hold as many treasuries. We're already seeing this trend. China has reduced its US Treasury holdings from a peak of about $1.3 trillion in 2013 to around $775 billion today. That's a 40% reduction. Japan, traditionally our largest foreign creditor, has dropped from $1.3 trillion to about $1.1 trillion. Saudi Arabia held about $135 billion in treasuries in 2020. Now it's down to around $108 billion. These aren't random fluctuations. This is a coordinated move away from dollar-denominated assets. And when demand for treasuries drops, yields have to rise to attract buyers. We're already seeing this. The 10-year Treasury yield has been hovering around 4.5%, up from under 2% just a few years ago. Here's the math that should concern everyone. We're currently spending about $880 billion per year just on interest payments on the national debt. The Congressional Budget Office projects that if current trends continue, that number hits $1.4 trillion by 2034. But that projection assumes relatively stable interest rates. If Treasury yields spike because of reduced foreign demand, those interest costs could hit $1.5 trillion or more much sooner. At that point, interest on the debt becomes the largest line item in the federal budget, bigger than Social Security, bigger than defense, bigger than Medicare. You're not running a country at that point, you're running a debt servicing operation. And the only ways out are either massive spending cuts, which is politically impossible, or printing money to cover the gap, which creates inflation and further weakens the dollar. It's a doom loop. Reduced dollar demand leads to higher interest rates, which leads to higher deficits, which requires more borrowing, which requires even higher rates to attract buyers, which makes the deficit worse. At some point, something breaks. I've been thinking about this a lot because it directly affects Tesla and SpaceX. At Tesla, we operate in over 40 countries. We manufacture in the US, China, Germany. We need to hold cash in multiple currencies, manage exchange rate risk, price products appropriately for local markets. If the dollar weakens significantly, that changes everything about our financial strategy. A weaker dollar makes our imports more expensive. We import components, raw materials, equipment from all over the world. If the dollar drops 20% against major currencies, those costs spike immediately. We'd have to either absorb those costs and take lower margins or pass them on to customers through higher prices. At SpaceX, we have launch contracts with NASA, the US military, commercial customers, and foreign governments. Most are denominated in dollars. But if we're dealing with international customers in a world where the dollar is weakening, they might want to renegotiate or pay in different currencies. We need to be prepared for that. I've also been watching what's happening with the dollar's share of global foreign exchange reserves. In 2000, the dollar made up about 71% of global reserves. Today, it's around 58%. That's a steady, consistent decline over 24 years. And the Saudi petrodollar expiration is going to accelerate that trend. Central banks around the world are diversifying. They're buying more gold. The World Gold Council reported that central banks purchased over 1,000 metric tons of gold in 2023, the second highest annual total on record. They're holding more yuan, more euros. They're reducing dollar exposure, not abandoning it completely, but definitely reducing dependency. And here's what people need to understand about how these transitions happen. They're not gradual and predictable. They're stable for a long time. Then they shift rapidly once a tipping point is reached. The British pound was the global reserve currency for over a century. After World War II, it lost that status in about 15 years. From dominant to secondary in less than 2 decades. We live in a world where information moves at the speed of light and capital moves almost as fast. If confidence in the dollar breaks, the transition could happen even faster than the pound's decline. Not overnight, but over a few years rather than decades. I'm not saying the dollar is going to collapse next month, but the trajectory is clear. The foundation of dollar dominance, the petrodollar system, is eroding. and nobody in Washington seems to have a coherent plan for what happens next. The assumption has always been that dollar dominance is permanent, that the world needs dollars and will always need dollars, but that's not true anymore. China's economy is nearly as large as ours in real terms. Their manufacturing capacity is larger. They're the largest trading partner for more countries than we are. The yuan is increasingly viable as an international currency. The only thing that's been holding the system together is inertia and the petrodollar. Now the petrodollar is gone, and inertia only lasts until it doesn't. Let me talk about what this means for regular people, because this isn't just a macro issue for governments and corporations. If the dollar weakens significantly over the next 5 to 10 years, your cost of living goes up. Everything imported, electronics, clothing, cars, tons of consumer goods becomes more expensive. Gas prices could spike even if oil prices stay stable, just because of currency depreciation. Your retirement savings, if they're mostly in US stocks and bonds, could lose real purchasing power, not because companies are doing poorly, but because the currency those assets are denominated in is worth less globally. This is why diversification matters. I'm personally holding a significant Bitcoin, not because I think it's perfect, but because it's a hedge against fiat currency debasement. If the dollar weakens, if we get persistent inflation, having assets outside the traditional fiat system provides protection. I'm also holding real assets, productive businesses, things that generate value regardless of what happens with currencies. At Tesla, we're keeping more cash in euros and yuan, not just dollars. We're building currency hedges into our financial planning. We're preparing for a multi-currency world rather than assuming dollar stability. Here's what I think happens over the next few years. More countries follow Saudi Arabia's lead and diversify away from dollar-exclusive trade, not abandoning it overnight, but gradually shifting 20%, then 30%, then 40% of trade to other currencies. That steady erosion of dollar demand puts persistent upward pressure on US interest rates. Higher rates make our debt situation worse, which spooks investors, which reduces demand for treasuries further, which pushes rates even higher. At some point, probably within the next 3 to 5 years, we hit a crisis moment where the market seriously questions whether US debt is sustainable. That's when things get chaotic. The government will have limited options, and the Fed could cut rates, but that risks inflation. They could buy treasuries through quantitative easing, but that's just printing money to buy government debt, which also creates inflation. They could try to force other countries to keep using dollars through economic or political pressure, but that just accelerates the move away from dollars because nobody wants to be dependent on a system that can be weaponized. The only real solution is fiscal responsibility. Cut spending, reduce deficits, make the US economy competitive enough that people want to hold dollars because we're productive and stable, not because they're forced to by the energy market. But I don't see the political will for that. Both parties want to keep spending and keep borrowing and hope somehow it all works out. It won't. The Saudi petrodollar expiration is a clear warning sign. The system that supported dollar dominance for 50 years is ending. We're transitioning to something new, whether we're ready for it or not. What should you do? First, don't panic, but don't be complacent either. Diversify your assets across currencies, geographies, and asset types. Hold some international stocks, some commodities, some real estate, some crypto. Don't have everything denominated in dollars. Second, reduce debt if possible, especially variable rate debt. In a world of rising interest rates and currency instability, being debt-free or debt-light gives you flexibility. Third, invest in skills and productive capabilities. In any economic transition, people who can build things, fix things, create value, they do fine. It's people dependent on financial assets alone who get hurt. Fourth, pay attention to what's actually happening, not what mainstream media is telling you. The Saudi petrodollar expiration got barely any coverage. Most people have no idea it even happened, but it's one of the most significant economic developments in decades. If you're not watching the right indicators, you won't see the transition until it's too late. I'm watching this closely. I'm preparing my companies for it. I'm positioning my personal assets for it. And I'm trying to sound the alarm that this is real, it's happening now, and the implications are massive. The global market reset I'm talking about isn't some distant theoretical possibility. It's already in motion. The Saudi decision not to renew the petrodollar agreement was a historical turning point. Everything that comes after is just watching the dominoes fall. Most people won't understand what happened until years from now, when they're wondering why their dollar doesn't buy what it used to, why imported goods are so expensive, why interest rates are high, why the economy feels different. And the answer will be simple. The petrodollar died in June 2024, and everything else followed from that. I'm not trying to be alarmist. I'm just reading the data, understanding the incentives, and following the logic to its conclusion. The foundation of dollar dominance is gone. What comes next is a world where the US doesn't have the automatic economic advantage we've had for half a century. That's not the end of American prosperity, but it is the end of the free lunch. We'll have to actually produce value equal to what we consume. We'll have to compete on fundamentals, not monetary privilege. And that transition, while necessary and probably healthy long term, is going to be painful in the short to medium term. Stay alert out there. This is the biggest economic shift of our generation, and it's just getting started.